Let's return home, where Nigeria's foreign direct investment dipped 48% in 2019 to $3.3 billion US, and that figure further declined to $2.6 billion last year, a year of the full virus pandemic. Data available for 2021 shows FDI slumped to $77.97 million in second quarter ended June. That's nearly 50% decline compared to the first quarter, and 47.5% deceleration against second quarter of the year 2020. Joining me for a discussion on what the playbook should be for Nigeria to turn around its investment inflows in the new year 2022 is an investment banker and immediate past executive secretary of the Nigerian Investment Promotion Commission, Yewande Sadiku. Yewande is holding our first interview in 2022 here on Arise Exchange. Good evening.
Good evening.
Great to see you, madam. Thank you for making it. It's a public holiday, and we understand. But we appreciate. You are my first guest on the show this year, so I'm gender sensitive this year. for the year. That's it. But how did Nigeria fare? How did we finish up last year? We don't have a full year data yet, but what can we harvest from the data we have on ground as far as investment inflows for last year?
So you're right that the full year numbers for 2021 are not yet out. We'll know once NBS release their numbers. But if we go by the expectation on the global front, 2020, the first half of 2021 was much stronger than expected. The full year 2020 global inflows totaled about $1 billion. By the first half of the year, it was about $850 billion. So the first half of the year was very, very strong. The expectation for the second half of 2021 is that it'll be slower than the first, but the totality of the full year will be stronger than was anticipated. So the expectation is that for 2021, the full year numbers will be about the same as 2019 numbers, about 1.5 billion. Correct. So the expectation for full year 2021 is that we'll go back to 2019 levels. Yes. So pre-pandemic numbers on a global scale. Africa's recovery in the first half of 2021 was very strong as well. It was 78% of what the inflow was for the full year 2020. So the trend is expected to be about the same. The second half of 2021 will be slower than the first half of 2021, but the totality of 2021 is that will be about pre-pandemic levels.
I think the story 2022, what will be the key drivers of investment inflows for this year?
So I think for Nigeria, 2021 numbers will be lower than the previous year.
For 2022?
For 2021 will be lower than 2020 on account of insecurity and the new issues that we had to deal with, particularly in 2021. I expect for 2022, the global trend is that 2022 will be stronger than 2021. We're more used to life with COVID. It's a reality. There will be variants, there will be disruptions, but the world will handle it better than we did in 2020. I think it's the additional, so that basic level the whole world will have to deal with. It's the additional nuances that are Nigeria specific that we should be mindful of. And I think it's particularly important, this conversation about investment flows, in the context of the National Development Plan that was just released, that talks about Nigeria's expectations for investment and development until 2025. You mentioned earlier about the AFCFTA. For me, the AFCFTA almost underlines an urgency in ensuring that the matters relating to investment. Fundamentally, the AFCFTA is a trade agreement, so you can look at it from that perspective. But the objective, in my view, of that agreement is that it should shape where investment should go for investors to take advantage of the differential trade terms that the agreement provides for. So it really should be a pointer on come and invest in my country and take advantage of the trade values, the trade, value advantages, that the AFCFTA confers. So there's an urgency that we need.
So in terms of your outlook and investment inflows for Nigeria, in terms of the FDI side, let's leave the portfolio in terms of equity bonds, and let's talk about the critical brick and mortar investments that we need to separate the announcements from the real dollar for dollar on the ground.
Yes. I think we have to do better at joining portfolio to direct. I don't think we should be separating them. I believe that investors get comfort at portfolio level before they graduate to longer tenured direct investment. So if we keep separating them, we don't allow ourselves to join the dots that we need to do the things that we need to for the momentum that we get with portfolio.
So what makes foreign investors comfortable with foreign portfolio investment? What will make them comfortable? And that translates into FDI.
The biggest challenge with portfolio investors, I mean, they're comfortable with their underlying market issues, but the biggest challenge with many portfolio investors is their ability to not just bring in their foreign currency, but to take it out at a rate that they don't need to know the exact rate, but they need to be comfortable with their ability to access foreign currency when they need it, and to have a reasonable sense of where rates might be.
Okay. Just a fair sense, or just a fair idea.
Absolutely.
Of how more of what it will be when they want to exit, rather than uncertainty. So you think we still have a lot of uncertainty issue to deal with in the new year?
Absolutely, yes, we do.
But what about the FDI? Because we need to create jobs. I don't know how much jobs we'll be able to create with FPI, so we need the FDI.
We definitely need FDI to create jobs. My point is that FPI, over time, leads to investor confidence, leads to investor comfort, leads to acceptance of country risk, which leads to FDI. So we cannot separate them.
So the FPI is just a mirror, just a window through you look into the FDI.
Well, it comes well after FPI. Yeah. There's a lag effect from portfolio to direct, but we need a strong portfolio flow. We need investor confidence. We need investors talking about how well they've done in Nigeria, the portfolio end, to get people comfortable with direct. And remember, when direct investors invest and they need liquidity, they will get the liquidity through the capital markets. That's the best way for them to get it. So they need to be comfortable with the portfolio market as well.
So my final point with you, Yewande, is to how to translate promises or pledges to reality.
You know, this is a conversation that many of us have been having since people have been having it since we were young. We've been having it since we became adults.
How to bridge the gap.
Yes. In my view, we still need better coherence between government policies relating to investment. We were talking about foreign currency a moment ago. Foreign currency policy needs to tie into industrial development policy, needs to tie into education, needs to tie into trade and investment. There needs to be a coherence across all those policies that gives investors the confidence that they need to get. And some of the, I suppose everything government can help. Security, government can help. Government policy announcements and the suddenness, the frequency at which they change, the suddenness at which they become applicable are issues that give investors, some concern. But the brightest ray, I think, if you look in the tech ecosystem, Nigeria continues to lead in the attraction of capital inflows. Yet, the highest unemployment we have in Nigeria is in the youth bracket. So there needs to be a deliberate effort or deliberate efforts from government to unlock the potential that segment, which is the largest age bracket, has.
Interesting where we will go in 2022. You have an idea what the figure will look like?
No, I'm not a soothsayer. It'll be great to see NBS's numbers, and then, I'll be happy to debate them with you.
And we'll talk about that.
You're trying to make me promise to come back.
I'm trying to find out what you've been up to since you left the NIPC.
So since I left NIPC, I've been on...
That was in September?
Yes, it's been 3 months. I've been on a well-deserved break.
If you are a treasury bill by now, I'll be trading you. I'm looking at 90 days treasury bill. What rate am I going to get? What have you been up to? Well-deserved rest.
very well-deserved rest. I went back on the same pilgrimage I was on in 2016 when my appointment was announced. I went to walk the Camino de Santiago. I came back in early December with a clearer head and a readiness to, look at what next. I am certain that my preference, without a doubt, is the private sector. I think through and through, I'm a private sector person.
You've been an investment banker. Lagos welcomes you.
Amen. Amen.
Lagos welcomes you.
Amen.
You've been part of that market.
Actually, the world is welcoming me, not just Lagos.
For an addition, yeah. There's a Lagos here, there's a Lagos in Portugal. You can choose anywhere you want to be. But you're a good ambassador. Thank you so much, Yewande Sadiku.
Thank you.
We appreciate your time, your insights on the show, as always. Yewande Sadiku, investment banking professional and immediate past executive secretary and CEO of the Nigeria Investment Promotion Commission. Have a great evening and a great year.